Hello, everyone. I'm going to say good morning and good afternoon because we are operating across 3 different time zones from the UK to Northern Europe down to South Africa. I'm really pleased to see you all, really pleased that you have decided to invest 55 minutes with us. My promise to you is that you will get a return on that investment. I'm going to speak in a forceful, impassioned manner, because what we're going to be talking about is the excitement that we believe the 2023 economy, with all its issues, whether it be inflation or rising interest rates, whether it be the global shortage of skills and capacity, and whether it be the uncertainty of politics and trade relations, brings. The moment the status quo changes, cracks and creaks open up in markets that allow us as medium-sized businesses, owner-led, owner-driven, to be able to move quickly if we've built the right business to fill those cracks and occupy those markets.
Pavlo, you're muted.
It would be wonderful if you switched your cameras on. It makes the process of communicating and engaging far more vibrant, far more exciting, far more responsive, far more reactive. If you feel that you can, if you feel you're in a position or a place where you can, please do. I would love to be able to see you, greet you, say hello, and have a proper, good, solid conversation. And with that, I'm going to start by introducing myself. My name is Pavlo Phitidis. I have a history in business that stems back around 30-odd years, including a couple of turnarounds, 5 years of mergers and acquisitions, buying and selling companies. So being both in the startup, build, and grow phase, all the way through to buying and selling. I've done lots of business valuations, and I'm a co-founder of Aurik. Today, we are growth partners for medium-sized businesses, established businesses, across 4 different territories, as indicated on the map. We've had the benefit of having now worked with just over 3,100 companies in the last 15 years. And we can proudly commit to and say and show through the data that on average, our clients have enjoyed a 32.4% EBITDA growth rate, in other words, profit growth rate, and more importantly, an average annual revenue growth rate of 28.9%. We typically work over a 2-year period with our clients for good reason, as I will show you, which means that when you compound 28.9%, it sits more or less at around 64-65% revenue growth. Today, we're going to talk briefly about the problem and solution of growth. We're going to have a quick look at the future, the end game. I'm going to share a few stories with you. Briefly, I'll talk to you about how we get it done. I'm going to then invite you to an occasion, an event, and I promise you I will close out at 5 minutes to the hour in order to give you a break before your next meeting. And with that, let's start. 88% of 10,000 mid-tier companies that were looked at in 2014 and 15 across Northern Europe, the United Kingdom, and the United States committed to and confirmed that they want to grow. What surprises me with this is the other 12%. Now, bear in mind, this was done in 2013, 14, and 15. We now sit in 2022, and for the first time, especially in the developed economy environments, we are seeing in 42 years an increase in inflation and interest rates. Ladies and gentlemen, what this means is very simple. If you want to maintain the value of your company, that you have worked hard to build, you need to grow your revenues and profitability in and around 13 to 14 to 15%, simply to maintain what you have. Any growth above that is putting you ahead of your industry and your competitors. Inflation eats the value of a business, and it's hard to realize and see and appreciate until you come through to the end of your financial year. Growth is the way to sustain your value, but growth is also the way to grow your value. And within that environment, we have seen that lots of efforts and attempts to grow aren't working. The main reason is that many business owners relied on help. what we learned across that portfolio is that only 14.7% of the 88% who wanted to grow spent more or less an hour a month talking about growth. The leadership team would simply talk about growth. Of their employees, over 90% of the employees in those companies were completely unaware of the growth plan or the growth strategy or the growth intent. And what's worse, especially to technicians like us, is the gears that make the engine of growth move. Marketing, meeting business development, meeting sales, meeting fulfillment, meeting administration, driven by a team. The gears, the functions that make a business work, 68.4% of them were misaligned to growth. It meant that marketing might do a brilliant job, but sales would drop the ball. Or sales might do a fantastic job and drop the baton when handing over to fulfillment, and so on. They sought help, but never got help. We did a deep dive to understand what the solutioning was around this. And working with an array of advisors and consultants and coaches and accountants and services, what they discovered is that 88.6% said, we want growth as an outcome, not the advice on growth. Of those given growth plans, only 4.9% were able to implement it. It means today that we are sitting with more or less 98.7% of companies that cannot sustain and maintain their value without their owner being involved in the business. It's no wonder that around 95% of all companies started fail to sell and exit, preventing the owners of those businesses from ever monetizing the 10, 20, 30, 40 years of investment and risk. Solving this is what we then are going to be talking about. And we're going to do so by me sharing a fantastic analogy with you. Because building and growing a business is like sailing a ship. This is how any ship leaves a port to go to a destination. Without knowing what the destination is, you cannot chart your course, you cannot make the right selection of ship, you cannot resource the ship to get you from A to B on time as you're able to plan the journey. In the same way, we start our businesses often out of necessity, driven by economy. We get exceptionally good at ensuring we can maintain economy in our businesses, but only realize that the end game of every business, hopefully for all of us, would be an exit, a profitable sale. Starting with that end in mind is as important as starting out of necessity. The next thing is, every ship has a crew, and the crew operates in different parts of the ship, much like your employees operate in different parts of the business. What drives the behavior of a crew are the systems that tell those individuals what to do, when to do it, and how to do it, especially when the seas get rough, in order to maintain the safety of the ship in sailing to its destination. Then as business owners, we have one of two places to be. We all start down in the engine room. The engine room is really where the engines churn and grind in order to get the propeller moving, which gives forward momentum. Let's call that establishing the business, and let's call that driving income. It's where you're front and center of all the functions of the business, surrounded by your team who rely on you heavily in order to keep the forward momentum of the business in the market. The alternative is to spend time up on the bridge. And on the bridge, you have a 360-degree view right around you. It's a fantastic place to be. You have dials, you have the ability to control the direction of the business. It's where the navigation of the ship takes place. If you have a strong operating engine room, driven by a team that knows what to do, when to do, and how to do it, to keep the forward momentum of the ship moving, it puts you in the position where up on the bridge, you can navigate to the final destination. It's our view, and I'll be able to show you reasons why, that every business owner should be spending around 30% of their time in the engine room and around 70% of their time up on the bridge. If you don't lead growth, it simply does not occur. So on sailing to that destination, what are the challenges that we need to overcome? There are a few that we've identified consistently rolling out in 2022. From a leadership point of view, how do I remain relevant? How do I remain relevant as a leader in my business, but how do I keep my business relevant? The environment has changed substantially. The resourcing of companies has changed substantially. We have been hit wave after wave after wave of shocks within our economy itself. And within that changing environment, is what I do still relevant? And is the plan that I was relying on to get me to my end game still relevant? Is what I did last year going to be sufficient to get me where I want to be next year? Relevance is a big issue concerning most business owners today. The next thing is time. How much time do I spend leading and how much time do I spend doing? Going back to it, this is all about the bridge and the engine room. How much time are you on the bridge of your ship and how much time in the engine room? The earlier stats showed that around 98% of all businesses cannot survive for 6 months without their owners, both in the bridge and in the engine room. Finally, control, delegation. How do I offload a lot of the heavy lifting I'm doing to release my time in order to lead? And when doing so, how do I delegate in a fashion that I get solid buy-in and that the delegation sticks, so that once I've delegated activities and tasks, I can know that they will be reliably delivered. Across systems, sales and marketing, without a doubt, has become one of the single biggest challenges faced right across the board. How do I find, win, and hold customers? We are all working in completely over-serviced and over-commoditized environments. How do I get what we do to stand out? And in doing so, how do I engage customers and clients who have become ever more skeptical? How do I then hold on to my customers and clients, especially in the face of change that we have today? When I get clients on board, how do I fulfill my promises in a manner that when I do grow, I do not create chaos in the delivery of my promises? Very often, growth in itself, unless it's attended to, and increased growth and profitability, means that growth in itself brings risk into the business. Ensuring that you have operations that are dependable and reliable to allow your team and yourself to go into market, offer propositions and onboard clients with confidence is essential in building a purposeful business. And in that, how do I create a purposeful team? How do I find the right people to do the right thing at the right time? Right now, as we sit here today, globally, the single biggest issue around team is finding the right skills. And it amazes me because in the world of ever-increasing access to knowledge, deepening education, we are sitting in a situation where it's harder and harder to get talent on board. And there's a dearth, there is a complete vacuum of talent across various stages and spaces within business. It means this: we need to think about how to build businesses differently, because businesses that rely too heavily on people, and if you cannot find those right people, means that you have a business that will not be able to grow. Finally, the future. How do I grow a business where I can increase my revenue, but also increase my rate of profitability? In other words, when I grow a business, if my costs of servicing the new growth track the rate of revenue growth, it simply means I'm growing complexity. I'm not growing my profitability. There's a very specific technique to achieve this. And am I building a job or an asset? Think of it. If your business cannot function without you, if when a buyer knocks on the door, makes an evaluation that without you there, the likelihood of the business performing in the future will represent how the business has performed in the past as poor, it's unlikely that that transaction will ever occur. It simply means that what you have is a job. And ladies and gentlemen, we have seen businesses with upwards of 70, 80 employees, where upon evaluation, the resultant outcome is that without me there is no business. In other words, despite having 70, 80 employees, I've created a job. And lastly, how do I ensure that given the fact that I, in order to sustain my business and grow it, have to constantly invest into it, how do I ensure that I'm building a business that will allow me to, at the end of the day, monetize that in a wealth-creating moment? I put a question to you. and I'd love to see this in terms of, let's run a quick poll, Pippa. Which of the three areas concern you most? Is it in the area of leadership, the area of systems, or the area of the future? Where do you experience in your personal set of circumstances and within your businesses the greatest challenges over there? We'll wait for the results of that poll to come out. And whilst we're doing so, a few quick hellos. Guy Rigby, if you can just wave at the screen. I hope you don't mind me saying this, ladies and gentlemen. That man there is the oldest man to have ever rowed across the Atlantic. 3,000 miles over more or less 3 months. In a rowing boat. In a rowing boat. Sebastian, I see you there from Terra Analytics. Nice to have you. Keith from Origin up in Yorkshire. Very good to see you. Very pleased you've joined us. Mr. King, Medical Innovations. The globe is your market. And the other Mr. Kings from Nationwide Friends in Lancashire. Nice to see you. Andre, I hope things are good in Holland. Right, let's have a look at the poll. Where do we sit? Leadership, 17%. Systems, 46%. Without a doubt, if you don't have good operating systems, the opportunity to lead becomes impossible. If you don't have the opportunity to lead, the ability to control your future becomes impossible. So how do we get this all resolved? Right, we call it building an asset of value. And what I want to share with you is a business growth system that overlays the services or products that your company produces. Think about it. Any product you produce, you will find many competitors producing the same product. Any service you offer, you'll find many competitors offering the same, if not similar service. In the old days, dating back to 1850, we were told by Ralph Waldo Emerson, build a better mousetrap and the world will beat a path to your door. Well, today, everyone has an equally good mousetrap, or so it seems, in terms of technical evaluation. The world we live in today is, Mr. Emerson, if I can speak to you from your grave, build a better mousetrap needs to be changed too. Everyone has a great mousetrap. You had better beat a path to your customer's door. And let's talk about how we get that job done. The first part of designing the commercial systems to achieve this, to achieve an accelerated path to your customers' doors, is about building a business that solves distinctly well-defined customer problems. In order to do that, you need to know who you serve. In any industry, there are many different groups of customers that exist, and all those groups of customers behave fundamentally differently from each other. To the extent that you can't define or are unable to define the groups within the industries that you seek to serve, the opportunity to understand what problem they have, that you are able to solve, how the problem comes about, the cost of the problem not being solved, the manner within which they want to learn about how to get the problem solved is lost. And in so doing, the opportunity to reach those potential clients and customers in itself becomes very difficult. Once you do manage to define and reach them, understanding what their entire experience is around how the problem evolves, how the problem manifests, and how they seek to solve it, gives you a very good indication how to organize your marketing, your sales, your fulfillment, your administration. The reason for this is the following. Today, we don't live in a product or service economy. We live in an experience economy. I want to share a quick story of a business in the wine industry. They have been in the wine industry now, it's a second generation business, moving into its third generation. They were struggling to break through. There are a couple of big wine shows that exist around the world. At these wine shows, you have upwards of 5,000, 6,000, 7,000 wine farms and brands represented, each of them carrying a bouquet of wines, some Shirazes, some Chardonnays, whatever the case might be. Globally, most wine is bought by around 40, 50 big groups, the Walmarts, the Lidls, etc., and so forth. This particular business had an excellent range of wines. They were struggling to hit real volumes and land within these large organizations. What they eventually did is understood what triggers the buyer to make the purchase decision. It was not the quality of wine, which was similar to all the other wines. It was not the shape of the bottle, which was similar. It was about how to create a story on a bottle of wine that would find itself jumping off the shelf into a shopper's basket. They went, South African-based business, secured the mark of the Zulu King linked to Shaka the Zulu, put beads around the bottleneck, and on the back of presenting that as a story to distinguish themselves from 5,000 other competitors at a trade fair, secured an order of 1.6 million bottles across Walmart in the year that lay ahead. If you understand what problem you're solving, and you understand what experience your customers and clients want in having that problem resolved, it allows you to position effectively and distinguish yourself away from just products and services. With that in mind, you then need to create an absolutely consistent, reliable experience. Think about how that happens. It's in the process of marketing, the process of sales, the process of fulfillment, and the process of operations or administration. The way that a customer learns about you, the way that a customer engages with you, the way that a customer is serviced by you, and the way that a customer is billed and administered by you creates the overall experience that in whatever industry you're in, distinguishes your service or your experience to anyone else's. If we've understood exactly who we serve, where we find you, and understand what you need in order to have the ideal experience, and we articulate and deliver that through our commercial system design activities in a process, in an organized process that can be measured, taught, and trained, we can create that consistent experience. With that done and said, I'm going to share a very quick story with the client that we're working with up in the north of the United Kingdom. They manufacture and design PC boards, the things that make everything work, including our phones, probably our most important possessions nowadays. Those PC boards are going through a massive growth curve at this point in time. Around 40% of their revenue comes out of Spain. And on close inspection, we asked, why Spain? Surely we would have expected that the majority of your revenue will come out of the United Kingdom, out of Germany, and out of Italy, where a lot of technical product is made. There was no answer to that question. And what we very quickly realized is that the selling system, the activities of engaging the market, the activities of closing deals in the market, was not well understood by this organization. The work we're doing now is to understand what activities in sequence need to be put in place to replicate what we're doing and decode what we're doing in Spain to implement it across France, Italy, Greece, Germany, and the United Kingdom itself. It solves two problems. Number one, it will massively increase growth. And number two, it de-risks the fact that 40% of all revenue comes from Spain through a mechanism and manner of working that is completely unfamiliar at this point in time. With that done and said, the next question we need to answer is, how do you get the right people to do the right thing at the right time? We fundamentally believe from an Aurik position that one of the biggest challenges in delegation is, what are you delegating and to whom? How are you delegating it? What we have learned consistently is that delegation by way of instruction yields a far poorer outcome than delegation by way of a system. Think about it. If you have built a commercial system that's made up of activities, put into a sequence that give a measured outcome, and those activities themselves are trainable and teachable, those activities themselves allow you to recruit more accurately the capability and capacity you need on board in your organization. Far easier to evaluate that through activities than simply a CV or resume. And if you've understood the value of those activities, you can remunerate accordingly. Delegating an activity set is far easier than delegating a group of instructions or a position within an organogram. To the extent that you can delegate it, a system, it allows you to manage the performance of the individual, and it allows you to capacitate that individual in order to perform against the system. It's what starts to build a purposeful team. To the extent that you can work with your team to build that system of delivery, it is the elixir of culture growth and business growth. The construction industry is fraught with all sorts of issues around skills and talent. We worked with an organization involved in construction. They were general builders. Very quickly, we decided to position the business very differently based on the outcomes of the diagnostics we ran with the company. They opted to no longer be general builders and rather focus on building lofts. Through that, they understood where lofts were able to yield the most value. Through that, they designed 3 different loft drawings. That's all they sold. They productized their service. In doing so, they understood how to organize their supply chain, but most valuably, they understood what kind of skills they needed to build only 3 designs of lofts to clients that they were selling to consistently and repeatedly again and again. And it was remarkable. It meant that the talent they had on board, they were able to upskill. It meant that through practice and repeating the loft designs again and again, that talent improved. And through that process, not only meaning in work was found, but absolute consistency in work was found for that particular talent. In an industry fraught with skills shortages, this organization is yet to experience that. These 3 things give you 3 outcomes. Number 1, most importantly, organic growth. That consistent year-on-year growth, which should be sitting at around between 13 and 17%. It releases time for you to lead. And this is the purest definition of building a scalable business platform. Within this context and time to lead, you can then focus on the next area of opportunity, and that is growth. And the question here that needs to be answered is, how do you grow revenue and profits at the same time? I want to share a story of a baker that we've worked with now for just on 15 years. They've come on board at a revenue number that now is about 5,000% up over the last 15 years. The business owner, on starting with us at the age of 54, having been in his own business for 27 years, had hit a growth ceiling. Every time he grew, chaos within the operations grew. The team got completely discombobulated, and he had lost his steam, his love, his passion, his belief for the industry itself. In effect, after positioning the business specifically to focus in 365-day fresh baked goods onboarding in the hospitality sector, the system of delivery was built to service that requirement alone. The team was capacitated to deliver that service requirement alone. He had his organic growth, and in order to get to the next level of growth, the task that he had to face was, how do I find a new segment of opportunity, a new vertical to grow into, to bring in a stream of revenue that will maintain my positioning, maintain my system of delivery, maintain my team, so that when that revenue comes through, there will be a marginal increase in my operating overheads. So the rest of it will fall through to EBITDA. He found that in 365-day onboarding of fresh baked goods into the supermarket trade. Approaching growth in that manner gives you 2 opportunities. Number 1, to accelerate your growth into the market segments that you've decided to dominate based on your positioning. And number 2, to introduce and de-risk the growth in your business by introducing new verticals or new segments, for so long as they maintain your positioning, maintain the system of delivery you've built, and maintain the effectiveness of your team. The last part of building an asset of value is, how do you secure your value? There are 5 levers. There are 5 levers to lock and load and secure the value of your company. I'm going to be talking about them in the next slide. Because right now, the story around Mr. Charlie Mercer, sitting in Virginia, 56 years in the business of steel fabrication, has done exceptionally well, hit a revenue of more or less around $60–70 million a year. It's fallen off in the last 6–7 years down to about $22–23 million. Looking for a way to exit the business, working 6.5 days a week, having developed habits, working 6.5 days a week, has realized that in the 11th hour, businesses are not bought. They need to be built to be sold. So let's go there. In the future, should I knock on your door, and should you be willing to sell your business 5, 10, 15 years from now, what will that engagement look like? Because if we understand that engagement today, and we understand the levers we can build and bake into our business today to give us growth ahead, but also secure a future value for our business. In effect, we are being put into a position where we can have our cake and eat it. On average, across industry, and it varies from country to country, it varies from economic period to economic period, and it varies from industry to industry. Most companies attract valuation of somewhere between 3 to 5 times a multiple of your profits. Let's assume you have a 5 million profit. It means immediately the starting point for a negotiation around the value of your company sits at around 20 million. As a buyer, my first line of attack and the area that you need to defend is lever 1, positioning. I ask a set of questions that ask, given what you do and how you do it, what distinguishes you and your business from your 5, 6, 7, 10, 12,000 other competitors? To the extent that you are able to show that you have distinguished your business within a very competitive over-service marketplace, not by the features of your product or the criteria of your service, but rather by having identified 2, 3, or 4 segments of customers within the industry that you serve, and being able to demonstrate that you have owned and dominated those segments through creating an experience that brings those customers on board in increasing numbers. To the extent that you can demonstrate that, you secure an additional multiple. From 4 it goes to 5, the same set business, now valued at 25 million. The next set of questions I ask you is, how does the whole thing hang together? Think of it as a buyer. I'm looking to buy an asset that has the ability to perform in the future as it has in the past. And my concerns are, without you there, how does it all work? To the extent that you can demonstrate, you have a playbook on how your marketing to generate leads, sales to close leads, operations to fulfill your promises, administration to create the experience, hangs together and will be able to continue without you, you secure an additional multiple. The next question, logically, is in and around your team. My question is, without you there, who makes it happen? And to the extent that you can show you've got a team of leaders in the business that run, control, manage, innovate, and lead those operating systems to secure the positioning of the business in the competitive marketplace. And to the extent that that team is performing well because the systems have supported the positioning in the business, meaning that the team is likely to remain on, you secure an additional multiple. Now, when you're about to sell your business, the most important time to grow your business is not now while you are not planning to, but rather in the future, 2 years prior to an exit. The growth rates that you show and demonstrate are the growth rates that any buyer will forecast ahead. The argument saying there is a lot of growth still on the table in my business does not hold with an acquirer. Any acquirer says, I'm going to imagine your business in the future premised on the performance of your business in the past. Growth prior to exit is essential. Growth leading up to exit is therefore essential. The last set of questions I ask you is, without you there, what will happen? Will your supply chain remain intact? Will your team remain on board? Will your primary customers continue into the future with us? And to the extent that you can show that you are spending 70, 80, now 90% of your time on the bridge, it demonstrates that the business you have built is in fact independent of you. It earns you the final multiple. The same said business that would be valued initially at 20 million can earn a 45 million exit simply by demonstrating these 5 features to distinguish you from any of the competitive businesses that any acquirer one day in the future would be considering. Unable to support these, it diminishes the value of the business. The big difference between the two is a difference between building an asset and building a job. A credit bureau that we worked with a number of years ago had been in existence for 18 years, had a revenue of just over £4 million a year. Profit margins were tight at 9.47%. The estimated valuation sat at £1.6 million. Over a period of 2 years, we positioned them as an educational service into landlords and tenants, capacitating tenants in order to improve their credit ratings for landlords. Marketing and sales and engagement experiences were put into place, was delegated off to the management team, and it allowed the leaders to then focus on some really smart algorithms and innovation tools to assess and evaluate behavior in terms of creditworthiness. The business ended 24 months later with us, 58% up in revenue at around £6 million. The profitability of the business increased dramatically to 22.1% of revenue. And the valuation sat just over £11 million. Beginning of 2020, that business was acquired by an American concern. From an Aurik point of view, we work with clients that we know, after our evaluation, in doing what we do, we can deliver growth as an outcome. For that reason, we are growth partners rather than advisors and consultants. To demonstrate that and to create the alignment, we carry risk with all our clients. If we are confident that in working with you, we can secure growth, we should surely demonstrate that through our fee model. 70% of our fees are linked to growth as an outcome. Our establishment fee here was £3,500. And as we ended 24 months later, we ended in the last month at around £8,000. It turns talk into walk. How did we do it? The first thing we do with all our clients is run extensive diagnostics. Think of it as the MRI on the underlying business. We look at 207 activities that make up the system of delivery. We take a view forward of what lies ahead in the industry, whether it be changes through technology, through legislation. What will the impacts of inflation and interest rates do? How does it change and shift the status quo of the industry itself? From that, we establish 10 growth goals. We start working with you and your team to get the positioning of the business right and turn it into a completely customer-focused experience business. We articulate that through the system of delivery in lead generation and conversion systems, operation systems, and finance systems. And we ensure that in the process, we build a team-based approach to the development of all these systems. Think of it this way. The goals set the strategy. The systems bring the goals to life. The systems get built by you and your team. And in so doing, your team's voice is felt and heard. Their value is seen and manifested. It creates an immediate and automatic accountability. And importantly, it creates meaning in work. Within that period of time, it releases time for us to then focus on the next activity, which is around growth. How do we deliver it? Well, we deliver it through 12 accredited Aurik facilitators. We fundamentally believe that because 70% of our fees are linked to the performance of the business and growth as an outcome, that when we bring someone on board to help with goal setting, as opposed to someone to help with lead generation, it's horses for courses. Different professionals have got different areas of expertise and capability. And because we're relying on growth as an outcome, in order for us to grow through your growth, we bring a team on board that goes beyond just one or two individuals showing up. We work then with you and your team. It has been shown to be the fastest route to growth. Designing strategy in isolation of your team loses all the magic that members of your team working at the coalface of supply, the coalface of operations, the cold face of sales are able to bring an add to the design of that strategy. When it comes to creating systems, we lose all the magic if we don't work with your team to optimize the performance of how the marketing activities will work, how the sales engagement activities will work, and so on. We have learned that the fastest route to growth and the fastest road to executing on a growth plan is to go with your team rather than go alone. We co-create and optimize each system to deliver the growth goals as an outcome, and then we ensure complete integration to create a single experience right through the business itself. We track this, and we track it from start to end, much like you would track leaving the port to the port of arrival. And we do this through a dashboard that we create. And on the dashboard, we manifest and represent visually the entire build-out of the system of delivery. It starts to secure the body of evidence for any capital raise or future exit 5, 10, 15 years from now. We ensure that we establish a structure to effectively delegate the performance of systems to team leaders. We measure goal attainment. Our commitment is the goals that are set are the goals that will be delivered. And most importantly, we create a body of evidence to demonstrate how the business is performing and functioning. Call it an ongoing 24/7 health check. What that data then does is it allows us to create a series of algorithms that forecast the fundability of the business, the scalability of the business, the valuation of the business, and the succession capability of the business itself. A recycler, tough business, dirty business, difficult business, hard business that we worked with in South Africa. 24 years in establishment, running a revenue of 38 million rand, a profit of just on 10%, at an estimated valuation of 15 million rand. They started, sadly for us, but fortunately in the end, 3 months before the COVID lockdowns. It was a terrible time. The positioning we decided to follow was European auto. There are extensive manufacturers of European automotive brands in Southern Africa. In order to engage them, we understood what the buying process was around the recycling of dirty oil. The operating systems were built to meet the requirements and stringent regulatory licensing needs of European climate change. And through that, we achieved in the end a 43% increase in revenue, a profitability increase of 78.2%, taking it up to 22%. And this company was bought at the beginning of the year, ladies and gentlemen, for a 17 multiple. What had happened over here is that those systems, those environmental operating systems that governed how any recycling output should behave in order to meet European climate change legislation, was separated from the business and then on-sold as a form of practice management, allowing the operating business to run separately from the intellectual property that allowed the operating entity to run. It attracted a significant valuation on the mere basis that, in effect, from one business, 2 massive commercial opportunities emerged. Our entry fees, they were around 24,000 Rand, and we exited at 31,000. And with that, our promise was to exit at around 5 minutes to the hour. I want to share some next steps, invite a few questions, and close off with a 1-minute video asking probably the most important question that we should all be asking. But the next steps would be, before we meet with any organization, should we be invited to meet with you, we discuss the business in amongst our team. And we do so in order to make a really good use of time should we meet. We think hard and look hard to see, in doing what we do, what growth outcome could we possibly deliver to you. On the basis of that, should we meet, we look to understand more about the business, where you are today, but most valuably, where you want to be in the next 3 to 5 to 7 to 10 years. Because the only thing we all have control over is the future. We look hard to understand what needs to happen to deliver that outcome. From there, if we believe we can help, we will offer you a fully costed proposal. We will talk to where and how we will work with you, what the outcome is that we will deliver to you, and what the promise is that we hope to achieve together. Should that sit well with you, we then invite you to meet our broader team. And in meeting our broader team, you have an opportunity to experience what it would be like working with Aurik, what an average month would feel like, the sense of what we do and what we don't do, so we close any expectation gaps. You'll have a sense to bring your team on board, to have them excited about working with us. And you'll have a sense to close any other remaining questions that might remain. From our side, we look to confirm two outcomes. Number one, is there a good fit between us because we work over a 24-month period? And most valuably, in doing what we do, based on what you have shared with us at that engagement, will we be able to deliver the outcome that you are seeking to achieve? If after that event, we both feel confident working with each other, we simply move across to the paperwork. There are 5 reasons why companies eventually do choose us as their partners in growth. The first is alignment. Our fees are linked to growth as an outcome, not advice, not ideas, not business plans, and not hours charged, but tangible, measured growth as an outcome. Next, we bring tremendous value into your business. We surround you with 12 experts accredited on the growth system, not 1 or 2 individuals who hopefully will be able to deliver the complete experience. We match our facilitators closely to the appropriateness of where you want to take your business, the industry you're in, and the organizational structure that you present. Third, impact. We work with you and your team, and most importantly, your team, to implement and delegate fast in order to get results fast. Fourth, second to last, what we offer is a complete system. It's a single, optimized, linked system that provides you with the 5 levers of valuation and growth. And lastly, it's tangible. It's tangible. It's measurable. It's physical. It manifests on the dashboard. The evidence is there. We're able to see whether we're delivering or not. And if we're not, we lift things up. We lift things up for the mere reason that we are linked to you based on growth as an outcome. And with that, I'd like to invite a few questions, should there be any, address them, and end off with a 1-minute video. 1-minute video that hopefully will put you in a position where you look at 2023 very differently. And I believe it will. So I can answer immediately a couple of questions. Victor, nice to have you.
Oh, thank you, Bob.
Mechanical engineers. I've read about your business.
Yeah, my colleague Chris Swartz is down there this week, and
yes.
I must say everything.
Based out of Namibia, right?
In Namibia, yes.
Yes.
And I must say everything that he's told me so far, you've confirmed. We're quite excited to work with you, and I think the one thing that stands out for me is the fact, and you haven't really touched on that, is the fact that you are involved in so many different businesses. You know, if you get somebody to help you, the chances that they will have experience in that particular business is maybe very slim. But I think in your case, that's a big advantage for a business owner to draw on those experiences, you know, to take you forward.
You know, what's interesting about that statement, and I often discuss this with my team, is let's say you're in the coffee business, right? If you're in the coffee business, what do you think about? You think about coffee beans, you think about coffee supply chains, you think about coffee roasting, you think about coffee distribution. Your technical expertise is centered on coffee primarily as the industry that you operate in. And what I argue with my team is what we think about 24/7, our product that we think about 24/7 are the commercial systems of growth. So that's my first comment, corroborating what you've said. Secondly, with over 3,100 businesses behind us, to achieve that average annual growth rate of 28.9%, is no mean feat. Absolutely, some businesses grow faster than others to give us that average. But we've got businesses upwards of, in rands, 600-700 million rands, in pounds, 40-50 million pounds, in euros, similar values. Sure, they grow slightly slower, but to maintain and achieve that average growth rate means that 24/7, what we are thinking about is growth. And the ability that we hope to bring is that perspective across sector, across industry, whatever industry you're in, the commercial systems that drive the growth is what we bring as a specialism to the business. Wow, we have a very, very shy audience. A very shy audience.
I'd like to ask something, Pavlo.
Please do.
Pavlo, can you hear me?
I can hear you.
I'm just going to switch my video off. Can you hear me now?
I can hear you, Tess, perfectly.
Okay, I'm just going to switch my video off because I'm in Mauritius and the Wi-Fi is not so great.
Oh, no. I mean, that's a terrible place to be. Terrible place to be.
Yeah. And I have to live here every day. It's terrible.
What's your question?
So I have a business that has a fantastic product, but it's at the final stages of prototyping. So in looking at commercializing it, is it something that you guys will look at, or do we have to have a track record first?
Sadly, you have to have a track record first, not because we require it, but here's the thing. What we've learned, especially operating across the US, that in order to be ahead of your competitors, less is more. And what we decided as an organization now around 8-9 years back is that we would specialize in a very particular stage of growth. Given the fact that we need to work with you and a team in order to build the systems that will drive the growth, it means that we need two things from you. Number one is some time. Typically, in a very early stage business, you're 24/7 focused on generating cash flow. So we need to work with a business that has some resource behind it, in other words, a team, and also a business that has some time within leadership to focus on the structural and strategic elements that we bake into a plan. And with that, it's seen us in the South African context, work with businesses typically doing upwards of 15 million rand to 300 million rand. Within the United Kingdom and Europe, let's call it pounds and euros, from around 2 million odd pounds a year up to 50 million pounds a year. And in the United States, we're working up to about $100 million a year of revenue.
Okay, thank you.
There was a great question over here from Christian about the recession. Christian, recession for us is good. And I'll tell you the reason why. It changes the status quo. If you think about what the impacts of inflation will be, the lived experience of everyone has fundamentally changed. If you think about what the impacts of the energy crisis are, the lived experience of everyone has changed. The only time people look for answers to problems is when the problem manifests in a very tangible fashion. Right now, the massive retrenchments and firing of talent across the tech industry is in response to these changes that I just mentioned to you. The moment something changes, it means if you're operating on the front foot as a business and you have a very clear sense of who and where your market is, and if you have built your business from your market back to your product, you get the earliest signals of what needs to change in your marketing, in your sales, in your fulfillment, and in your administration. In very stable business environments, the opportunities to dislodge a competitor with you and your service is far harder than it is in an environment of change. But it means you need to build a business that is very, very customer responsive. In other words, customer centricity has got nothing to do with the commissions you give your business development and sales teams. It's got everything to do with how you generate the experience premised on who you serve and how the problem that they experience comes about. Folks, I know that it's almost 5 to the hour. I want to end off with a very quick video that will hopefully leave you thinking about what's next and sets everything up for 2023.
Sorry, Pavlo, we can't hear you.
Hear me now.
Yes, we can.
Right. Ladies and gentlemen, thank you very, very much for investing time with us. I hope I hope that I managed to give you good value for that time. Please implement whatever you can in the next hour or so. Alternatively, we will reach out to you. We will send you a recording of this, plus an email on a little bit more detail around Aurik. I hope to see you and your businesses in the next couple of weeks or so to set up a spectacular 2023. Ignore the bad news because we create our own news. Thank you all very much.
Thanks, Pavlo. Really appreciate that.